Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go. If you need help with anything, check out finding-value.com, where I dive deeper into all of these subjects, topics, sectors looking for investment opportunities. So we do have a coupon code that's still active. Mayday is the coupon code, one word, MAYDAY. And you get 50% off the first month to try it out, or you can sign up for a yearly membership and get a larger discount. So let's dive in here. Let's take a look and see what's going on in the markets today. We're going to start with the DXY. The DXY definitely getting hit today, down 0.6%. And to me, this still looks like we've got a long way to go lower. We originally have broken out of this uptrend line on pretty good size candlestick there. We are continuing to move lower. So this is some more follow through of potential weakness in the markets. And the 2-year yield going down like this is signaling that the Federal Reserve is most likely going to lower interest rates in the future. So the 2-year yield front runs what the Fed does, and then the Fed will come out with a decision of when the rate cuts occur and how big those rate cuts are. We did get data from housing starts. They are down about 14% is what I saw, 14-15% down, which means that the housing market is in fact slowing down, and I think that's what the Fed was focusing on. They raised rates to slow down the housing market, squash monetary lending, and I think they're successful at it. Now they need to, well, in my opinion, they would have to lower rates to see if it kicks back on the housing market. And that's where your soft landing, hard landing discussion would be at, is what the housing market does here if they do lower rates. 2-year yield, slightly lower today, down 1%. We're still in this flag pattern. So the dollar and the 2-year yield are pretty well linked together. As yields fall, so does the dollar. It's not like that all the time. There are times where things disconnect for a period of time. But to me, it looks like they're pretty connected right now. So this to me looks like an inverted flag pattern that could potentially head lower given time. Or it's going to base out here because the Fed may lower rates to this level-ish area is what the market is projecting. 10-year yield down 0.8%. It looks like we're getting a consolidation here of some sort. And we entered this consolidation from the top side down, which means that there's downside momentum. And that's obviously broken its increasing trend line there to the downside, all signaling lower yields potentially in the future. 30-year yield doing the same thing as the 10-year. We've broken out. We did a retest here, and it does look like we could potentially head lower over time. We've got the TYX-TNX ratio. I look at this to see which direction it's going and to what extent or level it's at. This here is a go long in gold and silver when it's down and it uninverts. That means a slowdown is occurring, and gold and silver love those market conditions. We are up today, 0.12%. Not a huge move in this ratio, but we are up, signaling a little bit of a tailwind behind gold and silver. TLT, which is bond prices, also higher. This is going to move inverse to yields, so bond prices look good to go up. We've broken that trend line upward, and yields conversely look like they want to go lower. The 2 and 10, in terms of the yield curve inversion, to me, this looks good to continue higher and actually invert further. We were uninverting here till August 8th, and now we're inverting the curve back again. So the 2-year yield is falling less or going up more than the long end of the curve. So it'd be falling less at this time. And we do have a broken downtrend that we've broken yesterday trading to the upside. Gold up $54 an ounce. We are breaking out of a wedge that is angled upwards. This occurs when you have a very strong move that's about to occur. So we are ripping to the upside for gold. Now, if people want to say, well, gold accounts for inflation, it accounts for inflation only during certain market conditions. We are in the market conditions for gold and silver to absolutely rip here. So we're up at $22,550 roughly, 25.46 to be exact. We're breaking out. This looks good to run further. And if yields continue to drop and we see the yield curve uninvert, gold's most likely going to continue higher. Now, silver, this thing could be a moonshot very soon here. We've broken out of the longer term big resistance level here. That's this upper trend line there. A lot of the times you hit the trend line and you go sideways for a little bit, and then you break out, you do a retest, which is basically completed now. And if we zoom in, we're starting to get the green army to show up. This is right before. So this looks really good for a big move higher. Gold's obviously our leader. That was up 50 bucks, and then we've got silver up 2% today as well. I think things look very good for gold and silver here. Platinum down slightly, but it's just a profit-taking day. Still looks good to go higher. We are still trying to break out of this downtrend here and squeezing into the corner here of a potential big move whenever this does break. The longer this base is out, the higher this is going to go. And we've been basing for 2015 is what we've been basing for. This is a huge pent-up energy that ready to be released when this does break. We've got palladium up slightly. That also looks really good. And we've broken this downtrend line to the upside. Looks pretty good to continue higher. Or at least, at worst, move sideways. We've got GDX, GDXJ, and SILJ ripping today. Absolute ripping. And I suspect that this is going to go way up. We are positioned for this on the website. I've talked about this in the midweek update where I think where the strengths in the market are given the market conditions. And this is definitely an opportunity here. Same with GDXJ. We're going to break through this resistance line. When you start breaking through resistance lines, this is where the big moves can come. It doesn't mean that it will happen fast. I think people confuse big with fast. We're going to break through, and then we're going to go into a big bull market. Think of it that way. If I were to guess, this is probably going to last between 6 months and 2 years. If we get a slowdown in these market conditions, they generally last for that type of period. Sometimes it moves very rapid. Other times it takes a little bit of time. And the big boys move first. The smaller companies obviously move behind it. And then SILJ also up 2.4%, looking pretty good to continue higher. Looks absolutely fantastic for the mining companies. So when we look at XAU to gold ratio, we were up today, even though gold was up massively, up over 55 bucks. Downtrend line's broken. We're coming from a very low valuation in the gold, or the mining companies versus gold. We have a long way to go higher here. So this is an absolute killer setup for those looking for value and growth and the market conditions coming into favor. It's all right here, in my opinion. Crude oil down. I don't know if this is down 3.2%. I know there are some contracts rolling over today, and sometimes that moves it in one direction or the other more than what it actually is. But we're down today, and it is still squeezing into the corner here. Under these market conditions, if a slowdown does occur, we can see oil break to the downside for a period of time. That would be a false breakout, in my opinion, and eventually will rocket higher. Gold is our leader. Crude oil follows gold with a 6 to 18 month lag. So we're squeezing in this corner here. Gold's already broken out, and this very well could break to the upside. But if the market gets a fear panic scare, we could get a false breakout before that big move. The reason I continue to talk about this potential false breakout is because I want people to understand that we could see a move lower, almost like a false move in one direction to get everybody off sides and then have it rip in the other direction. They hit all the stop losses right underneath before ripping it to the upside. And people also get short and then they get squeezed to the upside. That's that slingshot cheetah that I like to call it. TTF gas just moving sideways. Still looks good and is in a consolidation to move up. We've got natural gas in America down 3.5%. This has been bouncing all around, trying to work off inventory levels and trying to lower production with lower natural gas prices. And we've seen all of that occur in those daily updates I do, pulling back on production and inventory levels, not growing as fast for this time of year. Our boy XOP, yeah, you know me. We're back within the pattern. It looks good. It definitely sold off less than oil, which is a good thing to see. So maybe we can hold here. And if oil breaks to the upside, I think this will follow. But right now, we're just going through oil and some selling pressure kind of across the board in the markets, and people are getting a little bit weary of a potential recession. And a slowdown in the housing market is kind of signaling that that might occur. But it's going to take some time. I don't think it's going to be immediate. OIH, slightly lower today, but we've got a flag pattern that's inverted here. So we very well could fall to the downside in the short term before any move higher. If that recession does come, we could see further downside. Newcastle coal futures getting some selling pressure. That is a bearish engulfing. We could see some further selling pressure there in the short term. Or a consolidation coming off of a rounded base, though. So we could consolidate a little bit before working our way on up. Sprott Physical Uranium Trust continuing to see selling pressure. And we're at that support zone here, or support trend line. We're right on top of it right now. So we're getting right there, and we could break to the downside for a short period of time. The futures pricing continues to move sideways. We are right at the corner there of this falling wedge, and falling wedges generally break upwards. There are times where you could do this, where we get a false breakdown and slingshot it in the other direction. So be prepared mentally for either direction move here. URA slightly lower. It's holding on quite well, but we do have a weak bounce here, and we could easily sell off here in the short term if the overall markets get a little top heavy here. URNM, same situation, same with URNJ. They're all very well situated with kind of inverted flag patterns. Copper looks really good here, surprisingly. We got the stair-step pattern that's developed. Big buying pressure, green army, small selling pressure candlesticks. That looks good to go higher. Looks really good. And we're kind of putting in probably a head-shoulder formation. COPX up 0.62%. That looks good to continue higher. Working its way on up. We've got a breakout retest. So this is the breakout and then the retest. And you know what I do in retests? I usually buy them. Iron ore up 0.6%. Getting some downside pressure here. We could fall to the downside. If there is a slowdown in the market, we would see it in iron ore and a lot of these base materials. That does look like we could go a little bit lower there. It's an inverted bloody nose is what I call it. Aluminum, it's holding on up 0.5%. We're bouncing right off the support zone right below us. Nickel up 0.33, but momentum is still to the downside, and I'd just be curious. I'd hold on, let this pressure kind of downward momentum work its way out. Pressure momentum. MOO is looking really good for the agribusiness ETF, breaking to the upside. That actually looks really good. It just started breaking to the upside yesterday, getting some nice follow through today. That looks good to take off. That could be some investment opportunities here as we get into this corner and start to break, which we're doing right now. Emerging markets continuing higher, likes the weaker yields, weaker dollar. We could see a big move in emerging markets to the upside. Some of those Chinese stocks that are undervalued look pretty good today, and other emerging markets. Weaker dollar is going to be a driver of some of this. Now, in the beginning stages of a weaker dollar, we can see things sell off in the beginning stages. The dollar weakens, rates come down. These could still get held down for a little bit, and then will release. And these will go way up because of the currency differences. So emerging markets look really good. KRE is also looking pretty good with those weaker dollar, weaker yields, higher bond prices, putting in a pretty nice candlestick today. TAN down a little bit, still with downside momentum for TAN. We've got lithium right on support. It's holding. There could be some opportunities here in lithium right on support if we can get to a turn higher here. If a recession does come, I do think this will continue to have downside pressure if a slowdown does occur. REMX, also downside momentum, but it is trying to base out here. We've got Baltic Dry Index down right at support, but is down 2% today. Hopefully we can hold on here. We've got XHB home builders, which are down a little bit, and that is on the backing of the housing starts that are down. Now, home builders are important to watch because they're stuck between the data that is released today and most recently the lower housing starts, and then data that's coming out, the forward-looking data of 18 months. If we get lower yields, are we going to build more homes, and is this going to go higher? That's what I think is going to occur, and I think that's what home builders are pricing in, is lower yields causing a move higher in potential home building. As rates fall, demand should increase. And I think that's what the markets are trying to price in right now. Russell 2000, right at resistance. So resistance line going across here. We're sitting right on top of it. We'll see if that's support, if we break, or if we use it as resistance and roll over. We've got the SPX up. Somehow, miraculously, it's still inside the rising wedge. And the NASDAQ also got back within the rising wedge. Could this be a full retest before we head lower for a potential slowdown that's coming? Or are interest rates going to give it a kick in the butt when they lower rates to move it on higher? We'll find out. SMCI just moving sideways, but this still looks kind of ugly with downside momentum. NVIDIA is up 1.4%. That's actually bounced through that downtrend line and still looks good to continue higher. We've got Bitcoin up 5%, and I know liquidity is coming from China, and this is still a bullish formation at this time where we could still eke out a move higher if it wants to. It's got to break out either the bottom side or the upside here whenever this does make a decision. And then Ethereum's up 2% on the lower end of that, and it looks okay at the moment. We've got some big buying pressure, but there's some selling pressure still creeping in here as well. With this pullback, and we'll see which direction this decides to go over the next trading sessions. But that's what I've got for today. Give me a thumb up for the content, subscribe to the channel, subscribe to the website. We've got a question and answer session tomorrow, Saturday at 7 a.m. Mountain Time. You can ask me whatever you like. We're going to be going over a lot of stuff. I did find another opportunity in oil that I'll share with everyone on the website here. And that's all I've got for today, guys. So we'll catch you next time. This is Finding Value.